Okay, looks like I'm live, so let's get this party started. First and foremost, today's advice, right, is I have a buddy, Austin Clark, and he took a loss yesterday, and like he does it, he trades every single trade he takes in front of his students, right? Shares the statements, shares everything with them, and his students are, disgruntled because they took a loss. And that just tells me the level of professionalism and how serious they take the trading space. Um, the ones that you should be aware of and that seem kind of shady are the ones that don't take losses. Taking a loss is part of the business. Like we're risk managers first, and like I always say, we can the strategy is not even the most important part. It's how you position in and out of the positions. You're going to take losses. It's your job to understand the data and how to recover from that loss and have a recovery plan for that loss. We don't cry. There's no crying in baseball, and there's no crying when taking a loss in trading. So stop being a baby about taking a loss. Business expenses happen, right? It's just, are you able to put a tourniquet and stop the bleeding properly, right? And we're going to do a session on that, um, on how to properly collect the data for your losses. But starting off, we can see that we're above NFP Friday. We're expecting to come up to at least previous month 50%. And once we do that, all buy signals are back on, and we can expect the month to continue to close higher, right? All right, moving to the weekly. Fixed constant, we're above it, right? And we are going into the third trading week of the month, so we can expect this next week to continue to overextend and then to slow down a little bit for the fourth week of the month. All right. So because we are still in the middle of previous month 50% and NFP Friday, we don't really have true confirmation on, are we looking for the high of the day or the low of the day between 5 and 11, right? But if we look at how this week's been playing out, right? London at 7 made the low of the day. Right here at 10:15 made the low of the day. Which this was a hard one because like right here, this could have been, this looks like a high of the day scenario. So while this is happening live, right, you'd be thinking this was the high of the day, but in reality, it just came down and then just ripped all the shorts' faces off, right? This one, the low of the day was doing Asia, but the dominant low of the day, the obvious low of the day, happened in London, right? And this one, low of the day, happened at 8, right, during that London to New York transition time. This one, the obvious one, happened going into London, right? Yes, I understand that Asia made the low of the day here, and that Asia made the low of the day here, but that's not enough for me, right? I need an obvious sign that that is the low of the day in the hourly chart. And when you see that we dropped all the way down near Asia, and then we recovered it by before the open, that's an obvious sign the low that day is in. Obvious sign that the low of the day is in. It couldn't take out Asia lows, which is fine. It recovered this huge drop all before the open. It's a low of the day scenario for me, right? And this is on the hourly chart. So right now, nothing is that obvious for today. All right, moving on. So we've taken out previous day's highs and we're above it. Couldn't get back. This day we can't get back to the midpoint. We ripped higher. This day we can't get back to the previous day's midpoint. We go higher. This day we can't get below the previous day midpoint. We go higher. This day we can't get below the previous day midpoint. We go higher. This day we can't get below the previous day's midpoint. We go higher. All right. So that's the clue that the market's telling us right now, that these previous day midpoints are being respected. So now we're going to pay attention to that, right, as we go into Friday, right? According to Josh Hughes' open high-low stat map, right, which is set on the day, which measures the last 1,000 days, or however long it goes back on the 5-minute, right? We can see that it measures the MAE, or as the ICT people call it, the manipulation and what the possible distribution is. We haven't violated either side of that, right? So when we haven't violated either side of that, what I like to do is I like to highlight both sides of it, because when I do standard deviations, right, basically the average range, daily range, right, to see where the clues are going to be for what side is the false side for the day. Because remember, each daily chart has an open, a high, a low, and a close. It means there's 2 wicks. One of those wicks is going to be the false day. The other side of the wick is going to be followed by the distribution. All right, let's see. Let's do this like such. Having a brain fart. Oh my gosh. All right. Having traumatic brain injury sucks sometimes. Even when you repeat the system 1,000 times. There we go. Right? Like you still forget what it is. Okay, so our average weekly range, right, over the last 8 weeks, which incorporates the quarter, right, is at 936. We've already met it by moving over 1,000 handles, which is around 124% of the average weekly range, right? So that tells us the high of the week can be fine being in right now. It can turn around and suck back into the range. It's okay, right? The average daily range is 554, and we've only moved 22% of that, which is 122 handles. So let's draw that out real quick. So if we actually meet the average daily range, I'm going to have to delete these. It's like a work of art. Nope. If I hit remove drawing, I just will delete all of my stuff. I'll just delete these. All right. So if this is the average daily range, we need to draw that out. Friday from 4 to 8 is 0.4. From 8 to 12 is 1.5. 12 to 16 is 84. Still verifying this indicator, so I want to double check. So this says 77. Check something. Oh, this needs to be on the 5-minute too. There we go. So yeah, 45, 116, 85, good. 42, 11. Okay, perfect. Okay. So now we have our average daily range, right? And we can see, right, it's going to line up with the what's currently there, and we've already moved 122 handles. Right? So if I move this line to line, we can see it's close. Average daily range 554. This is on 41. Right? So our job, we know, is that this has been accounted for right now. Our job is to figure out where the rest of this goes, right? And that's what we're looking to do. Dude, I gotta open up this little message thing to see if anybody's talking. How the hell did I do that? There it is, chat. Okay, good morning, good morning. Good morning, Captain. Blue Dog here. Have a great Friday. Yeah, absolutely, brother. Okay. So now, right, what is the generated market clues that the market's given us so far this day? Well, we know momentum for the daily is up, right? We know that we're in a tighter range than what we've usually been in during this time of day. I mean, yeah, for the last week or two, like, so let's move on. Put on midnight snap. Start putting our probabilities in there. 1800. All right, which is down here. 62.6% probability. 19570. 66%. 8 to 12. Let's make this black. Let's do midnight. So when the market's in a tight range like this, it's not shown its hand yet, right? So we have to understand that the market hasn't shown its hand, and that our job is just going to be focused on the attention to detail things that you have right now. And there's no sense rushing the system. And like for me, like I have to be done. No worries. Oh, there's 2 coasters on my chat. That's weird. Anyway, like I know I have to be done by 6:30, right? I'm okay if the market hasn't shown its hand. I'm okay with not completing this. I'd rather not complete it than half-ass complete it to the point where it's going to skew my thought process. Because remember, this is about making decisions around this and syncing individual systems around it. I don't trade it live. Most of you guys will try to trade around it live, and you, like I say, the further out you try to predict, the least accurate your predictions are going to be, and the least accurate the probabilities will be, right? That's just how it works in any kind of statistical analysis, right? It's like if you're walking in the woods in a straight line, and I give you an azimuth, let's say 220 is the azimuth. The farther out you go, naturally your line of drift is going to shift left or right. Maybe you pronate one side to more than the other. Same thing goes with looking at data, right? The line of drift is going to skew to the left or the right. All right, so we did midnight, we did 1800. Let's do settlement. Okay, settlement's right below 1800 and only goes down 57, so there's no sense in that. Now we're going to start looking at a time base. Structure-based probabilities, right? So I do time base, structure base, right? And then projection based probabilities, right? So this would be a structure-based probability, and they probably have a name. I'm not the only one doing this. That's just what I'm calling them because it sticks in my brain, right? Like, and probably is not the right name for it. I don't give a damn. All right, so this high is lined up with 3 o'clock. So I want it. So we're going to log it. Sorry about missing yesterday. I have traumatic brain injury, and due to that, I have sleep apnea. And there's days that I go without sleeping, and then my body just instantly crashes, and like that happened yesterday. My body crashed, and I was not able to wake up. It's a really weird condition too, because like when they did the test on me, I guess I stopped breathing 30 times an hour. Like that's pretty crazy in my sleep. Okay. We can pull the probabilities of here, like this structure, or we can come down and try to pull this structure. The problem with this structure is, right, you got to realize that it probably will be low probability, right? So this is why I do time, structure, and projection probabilities. Okay, so let's do 13. Between 8 and 12. Do we return? Let's push this out to 1600 because I'm very curious about this. Can't push it out to 1600 because let's push it out to 1259 because then it's overlapping. It's thinking it's pulling for today, and of course it's going to have a high probability. So 48. So we'll go with 48%. All right, now before we get into the next part, right? You got to realize there's 1,000 different ways. Dude, I got a CPAP machine, man. Like, I usually end up fighting it at some point in the night, thinking, listen, like, so I'm gonna fuck me up. Like, I'll wear a CPAP machine, which is due to traumatic brain injury, which was from getting blown up, right? And the TBI gave me the sleep apnea or some shit like that, right? But then I'll wear the CPAP machine. But then I have nightmares and night terrors from PTSD, and so I'll wake up fighting my CPAP machine, and it's like I can't win. I can't win. It's kind of hilarious. Okay, so now we've done our time-based projections. We've done our structure-based. We've done our time-based probabilities, our structure-based probabilities. Now we're going to do our our projection probabilities, right? And what is a projection probability, right? Like this is like the DR uses, the 1930 to the 2030, and they put standard deviations away from it, and then they pull probabilities. I know, right? The ICT community does it with the central bank Dillon range, where they look to see, they look to see between, I think, and ICT people, like, feel free to skull fuck me because I get the timing wrong, because God forbid. But they use 1500 to 1800 or 2000, and then they build standard deviations off of that. And then what that's supposed to do is it's supposed to show when the high of the day is in, because price will go up to the 1 to the 2.5 reverse, and then by 11 o'clock it should be hitting the 3 to 4 standard deviations lower, right? My buddy Jonathan, really good dude, really really good dude. He uses the flout, which I like the flout, right? So we're gonna do the flout in his honor. Whatever way you want to do it, the projection probabilities, just stick with it. Rinse and repeat it over and over and over and over and over again, and just start measuring how price operates within that projection, right? I know there's other ways within the ICT community that they do it, where they do the range-based probabilities, and then they're able to tell if a soup's supposed to happen here or if an order block's supposed to appear here. I don't know enough about it. And honestly, like, my job is to keep every single process simple, stupid, so I can log it back, test it, and journal it, and trade it, which is the most important part. All right, so let's see. Let's do the flout. Jonathan, are you on? 1659. Yesterday was Thursday. All right, so now we can see that out of the last 14 weeks, the plus 5 got hit 64% of the time. The other side of the 5 had a 28% probability of getting returned to. The 8, which is up here, got hit 57% of the time, 7% probability of getting to the other 8. 16 got hit 14% of the time. Well, 12 got hit 28% of the time. 16 got hit 14% of the time. And 0 probabilities. So, looking at this, right, we can see that the negative 5, which has a 28% probability of the other 5, positive 5 getting hit, is probably the most likely one, which is around here. So, and listen, guys, like if you see that I'm doing something a certain way and you have a better way of doing it, speak up, right? Like I'm not a guru or furu. Like I just know my system because I repeat it over and over again. But if there's an easier or better way of doing this, like feel free to throw it at me. Like I'm the first one to be humble enough to be like, bro, you're so cool. That's so much better than the way I do it, right? I want to be your friend. It's a level of humility, right, that I've gained over the years that told me to not try to be right in everything because there's really, really smart people. It actually pissed my squad leaders off when I was a platoon sergeant in the Army, right? It would piss my staff sergeants, my E6s off because, like, if I had a private or a specialist actually who had a master's degree in something and we were making plans for it, like I would choose that specialist over the staff sergeant to make the plan because he's got the master's degree. And they'd be like, but I've been in the Army this long and I'm a staff sergeant. How could you choose? Because it's talent management, right? Like, I would never put that specialist in charge of leading the men while bullets are flying. That's your job. You've got the experience. I promoted you to that rank for that. But when it comes to planning operations, he's got a specialty in logistics. Why would I not have him plan the logistical part of it? Duh. Having the ability to know that, like, I'm not the knower of everything has saved my butt so many times from a lot of headache and hassle. All right, so now what we're going to do, and this is the part that is part of DR, which if you're not part of DR community, I get it, right? You got your own religion you follow, but like I use DR because number one, they're some of the best statistical people out there, and they understand how to collect the data in a way that it's just amazing. This is not an advertisement for DR. I'm not an educator. I'm a trader, and this is a part of the process that I use. One of. Now, if I can get my database to pull up. Now, remember the higher time frame. Why is this doing this today? Let's exit out. New tab. Yeah, brother. All right. Looks like I'm going to have to clear caches. Caches, or whatever they're called. I say cache. I'm going to have to clear out the weapons cache. All right. Let's see. For some reason, I cannot get my software to pull up, which is fine because I'll just use Excel. Remember, 2 is 1, 1 is none, right? If you're using data or software from anything, like for example, like I'm about to use a software, that allows me to put the variables that Asia did and the variables that London did to project what the highest probable New York variable is going to do. If you're going to use a software, right, 2 is 1, 1 is none. You should always have 2 of that software to account for that, because if one goes down, let's say, God forbid, something happens to M7, right, and his software goes to shit, I'm risking real capital, right? Like, this is part of my business plan. This is my scalable overtime business plan for the hedges that I make on the intraday trade, right? I'd be a fool to put all my eggs in the basket and not have an insurance plan that the technology that I use is going to eventually go away or get replaced. So that's why I say 2 is 1, 1 is none, right? Like, if this indicator goes down right now, I have 2 to 3 indicators that does the similar function that this does. So if this goes down, just jump over to one of the other ones, right? Because I trade real money and my workflow process is serious, and like, it's what I have to, it's the definition of what I told myself, that like, if you're going to risk capital under this time horizon with this amount of leverage, these are the requirements that you, Matthew Mickey, have to place your risk capital, right? It's not based off of this person telling me I should trade this way, or this back test telling. No, I looked in the mirror and said, if I'm my own boss, then I need to define mandates, and I need to build SOPs like a boss would, and I need to lead myself in the trading arena. That's why, like, most of the time, like, if I make a mistake, guess what? I have to whip myself, right? That's what it's all about, right? Like, I overtraded, and I was trading AMP futures at the beginning of the year. I overtraded, broke my rules. What did I do? AMP futures is a discounted broker that allows you to use margin. You can trade one NQ contract for an intraday trade margin of $300. Well, I broke my rules of overtrading, and now there needs to be a consequence, because if I continue to support that behavior and I don't do something so damn extreme that forces me to stop doing that mistake, right? I'm eventually going to blow up, right? So what did I do? I pulled all my money out of AMP futures and I put it in a Thinkorswim account, right? Thinkorswim says, hey, you have to give me $1,300 of leverage to trade one micro, right? These are the little steps and these are the little edges that you learn that's more important than any strategy to keep yourself sustained. Because remember what I say about intraday trading, right? It's the most riskiest, the most stressful, and you have to babysit it the longest, right? Because it's so noisy. So that means you have to be an extreme risk manager and trader manager as well, right? You're your own hedge fund manager. You're your own risk department, right? You have to incorporate steps that force yourself out of these bad habits. Guess what? Trading psychology is not a thing if you're doing the numbers right. You should know how much you're going to win, lose, all that stuff, right? I know my max daily allowance for how I'm going to trade this, right? Right? Once we're done building this, I'll get into that. Okay, so what did NQ do in Asia? NQ had a false day, right? So we closed below, right? And remember, I told you guys can use this ICT concepts, ICT one setup for life to define your Asia, London, and New York, right? See, I just showed you how I use insurance for everything, right? Like, if M7 went down and I can't get his little standard deviation thing, that's fine, right? I'll just go to this script right here, right, and define it that way. If that goes down, I'll draw the box. Oh well, right? So we can see that we went short, and what did we say? Let me shut this down real quick. Let me hide roll ins. All right. So Asia, right? The initial balance of the DR of Asia, initial balance for the auction theory people, DR range for the DR people, Asia kill zone for the ICT people. See, it's all the same definition. I mean, it's the same, just different religions, right? So we broke out of the range to the short side, and then we already know that out of the last 4,200 days, right? When we break out of the short side, 1,042 of 1,000 of those days, we come back and breach the high, right, of that between 2 and 3, right? We know that 3,000 of those days, when we break out of the initial balance of Asia, we return to that other side of Asia between 3 and 9:30. So we know that if we build a risk profile, dude, DR and Wolfpack trade completely different. Coastal L, like 1,000% different, right? Like Wolfpack focuses on retracing the midnight snap. They focus on this probability right here, right? This is the only trade because Austin doesn't want to. Austin wants to trade the most simplest. He takes a higher probability statistics and he trades towards that between the highest probable time of that higher time frame probability. So if midnight price is right here, pop up, right? It's right here, this line right here. That's midnight. And he knows that the highest probable time that price will shift back towards that midnight price is between 8 and 12. He'll only trade from 8 o'clock to 12 o'clock, and he will wait for leptocratic distribution. Leptoketosis, right, which is the rate of change, right? Yeah. And he'll trade that for 25 handles, and he'll DCA into the loser, and his 25 handles move down. He's not trading towards midnight price. He's trading 25 handles. I mean, he's not trading to midnight price. He's trading towards midnight price, just like profitable loser does with the 1800, right? And then his other way is that he uses these distributions, which I don't have on my chart. Let me unhide drawings. This is the 8 to 12 distribution on average, right? So when he gets to distribute his ketosis, the correct ketosis that he's looking for, rate of change when I say ketosis, right? He'll trade for 10 handles that way. Or his A plus setups for this is going to be once price fulfilled that time. So this is the 8 to 12 average range, right? Once we fulfilled this, and we can even go below it, right? As it's coming back into it, if he gets the right ketosis entry signal, right, he'll trade towards it and he'll take his 10 handles, right? And he'll do 2 of those a day. So he trades 25 handles to midnight. He trades 2 10 handles to this, and then guess what? He's done for the day. He doesn't give a shit about being a market guru. It's one of the reasons why I love him, right? He's just a vet who's like, I don't need all 5,000 handles that the NQ produces every day. I just need the highest probable ones for his definition to place risk behind, right? Because it's about making money, not looking cool to him. Right? All right, back to this. Sorry, I got sidetracked. All right, so if we know that Asia, right, and then there's other strategies that we're currently back testing, like this Asia one. right? That has a high probable win. But it's all about the risk profile that you build. Remember, the strategies, the bullshit, right? The strategies, the Corvette that's at the dealership, that with a big sign that says sell, 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 best sale of the year, right? That's what the Corvette says. Does that mean you just pull in and you buy the Corvette, right? That Corvette's the strategy. No, you go in. What's the sell? It's 60,000. How is that a sell? Because we had the price at 120,000 last week. Okay. What's the interest rate? We can finance you for 27%, but USA can finance me for 3%. You see, like the risk profile that you build around these strategies and how you enter those strategies are more important than the used car man sales strategy. Stop falling for the fucking fake bullshit, right? Is what I'm saying, right? And since we're on that topic, I want to go over that, right? Let's take this day because this is an extreme day, right? Let's say right in here, right? We wanted to short the market. We've got a signal to short the market here, right? Actually, let's even put the indicator on. Let me see. Yesterday was Thursday. 8 to 12, 1.37. See, you done distracted me. And now 1.37 is the average distribution. Right here. From 8 to 12, we know that the average distribution is 1.37. Right there. So we'll overextend it because of the news candle, 1.37. Let's say that this is the ketosis distribution that Austin is getting, right? And he wants to take a short. He wants to sell for those 10 handles, right? I wish I was on a micro. Let's do a micro real quick. Let's go back to the same scenario. Oh, cool. It put me right on the same scenario. 1.37 right there. So we know that we're past the average 1.37 from 8 to 12, right? And he got a signal right here, right? So he sells 3 micros, right? And he gives himself a cost allowance of 1%. I don't feel like fucking with that, right? And this isn't his strategy. This is a strategy that I do, right? No matter what the trade is, I give myself zones that, because when you DCA, right, you're either DCAing to add into the position because you're expecting a reversal, and when you do that, right, let's say he's targeting 10 handles, right, which is that amount, right? Damn it. We'll pretend like that didn't hit. He didn't get his $129, whatever it is, right? But price went against him, right? When I get to the 5, right? So I'll DCA if I have that higher time frame probability going for me, right? I'll DCA to add to the win. Like, so for midnight, I'd be DCA. I would give myself this much allowance, right? And then I'd be DCAing every time I get a kurtosis distribution going in that direction. And then as I DCA, my average cost pulls up, but then so does my take profit. And guess what? My stop, my cost allowance is pulling down, right? So we're bracketing the position, right? That's one way to DCA. The other way to DCA is knowing that I have the reversal data for every single, for this specific time, kind of like we do in Asia, of the reversal data for every single time. And I know that once we pass the 5, that the reversal data points us to go more towards the 1 than to come down to the other side where the target is, right? So I know if we hit above the 5, I need to DCA to get that position to break even and get out of the trade. I'm not going to just take a loss if I can fight for it, right? All right, so let's say we hit the 5. So now I'm going to add 3 more, right? Pulling my cost allowance up, and my take profit is going to be set to break even, right? And either I'm going to get stopped or I'm going to get break even, right? The original contract was worth $1,000. Now it's worth $1,800. No, actually, it was $1,400. Now it's worth $1,800, right? And it's not. This one's going to get stopped out, right? Because the reversal data tells us that if we get above the 50, there's more likely that it's going to the 1 than whatever. What the hell? So I would have just had to take a loss on the chin for $1,300 at the end of the day, right? Or I could have DCA'd at zone 7 right here again to get out of that position, right? And this is why your risk per trade is very important for you to, like have the strategy defined and have the game plan going into the trade because, all right, so that's what we're going to DCA again, right? Because if I threw 1 micro on, guess what? Or if I threw 1 mini on, there's no getting out of this trade, right? So most strategies have a 60% win rate, right? This way of DCAing accounts for that 40% loss rate, right? And this is why knowing your strategy and having the data behind your strategy works so well. Like, so we do the Asia trade, right? Like this works phenomenal on the Asia trade. So out of the last 162 days, the Asia trade has lost 26 times. Doing it this way, I've taken that loss down to 7 times. So I took my loss, which would have been around, I don't remember the dollar cost at average, but like I would have lost 26 times because I know how to DCA myself out of a loser because the data tells me once we breach this level, it's not going to your take profit, it's going to the other, your stop, right? I'm able to navigate that, and instead of losing 26 times, I can lose only 7 times out of the last 162 days, right? So let's say when we get to 0.72, we're going to sell 3 more. We know that this doesn't go to break even. All right, so what, did we cross it? We're crossing it. So we sell 3 now. Motherfucker. All right, let's draw a line where it was. So now I'm getting sidetracked. And it eventually would have came and stopped us out from break even right there. And we wouldn't have taken the loss. Right? That's why the risk profile is more important than the fancy strategy, right? All right, let me go back because I need to finish this up because I'm running out of time. And the cool thing is if you put yourself in the mindset, you have the rest of your life to figure this out, right? And you don't do like most people where they just completely don't do the right steps. They don't collect the right data. They're going to blow up. They're eventually going to blow up enough times where they have to leave the markets and say it's rigged and all that when it's not rigged. A lot of people have done this before. Intraday, if it doesn't work out for you, intraday, learn how to trade on a longer term time horizon. I've been sitting in bonds for 2 months. Right? I've been sitting in individual companies for 30 days and they're doing just fine, right? I'm winning very well. Listen, that GAN box at 1%, I've collected every single reverse data for every single time of the day, right? Like, I know reversal data better than most, and I know how to trade myself out of a loser all day long. And yeah, it's uncomfortable. Just like losers are uncomfortable, there's nothing worse than these two things. Add into a trend in position and add into a loser. But that's where the real alpha lies, right? The real alpha is in the most. You get paid in these markets to take risk that people don't like taking, right? That's why I laugh at people who think this is such a linear process. Yes, your strategy needs to be as linear as possible. Your risk profile is not linear. All right, let me get focused. So Asia was a short, false. Right? Did we break the midpoint of Asia by 3? Cool. London was a short. And so far it's a true. So we're going to leave that out. And did we break? Yep. Okay, so for what the data is telling us is that New York will be in here, but then we go long for the rest of the day. Where have we seen that before? London made the low and the reversal happened at 7:05 on this day. London made the high during the 8:05. Reversal happened for the New York, but we finished the day longer, so New York was low. The close was higher. London made the low at 7 o'clock on this day, right? For us to end New York higher. London made New York made the low right here. For us to close, I wouldn't say higher, but yeah, higher than the opening price. 8:05 made the reversal here for New York to be lower, but for us to go long. So the New York, when I'm saying New York, I'm talking about 9:30 to 10:30, and then the close being higher. New York was higher. So we're in that market condition where we can expect what the data is showing us, that London goes low, New York 9:30 to 10:30 can go low, but for us to close higher, right? I know I've been all over the place lately, so I've given a lot of information today and I don't want to overwhelm you guys. And I'm already out of time, so I actually need to stop the recording, stop the streaming. Right, and go on about my day. So hopefully this was helpful. Give me some feedback, right? Like, what are you getting? Let's do a quick after action review. What are some things that you like? What are some of the things that you don't like within my stream? Write them in the comments, please. Like I said, I'm not an educator. I'm just a dude that trades. And no, I'm not trying to get you guys to comment. I don't get paid by YouTube. None of that dumb shit. Like, I'm just like most of you guys who are listening are my friends, and you guys know my intent. If you're new here, learn my intent, because everything's about the intent of why a person does that action. And no, I'm not sharing DR data with you guys. That'd be disrespectful to the M7 community. Like the process orientation approach, 1,000%, 100% consistent. Thank you, Jerry. let's go, guys. Like, what's some things I can improve on? What's some things that you'd like for me to sustain with my teaching style? You guys better be glad you're not my soldiers. You'd all be doing push-ups until you answered. What is the 5-9 box on you? If you don't mind, toast to L. Go to the last live video. I walked that very detailed with that, right? But if you want, we can go over it real quick, right? Let's give it 1 minute. Let's turn this off. All right. Why did I continue buying the bid yesterday? Right? If you haven't read my Sergeant's Time training, where I specifically go into how to identify the market condition of the previous hour's midpoint in these 5-9 boxes and how you design the risk profile to that, then don't waste my time by asking these questions in here, because if you can't read, you probably shouldn't be trading. You should probably not listen to me anyway. You should probably listen to the person teaching you how to read. All right. So, right, these hourly midpoints tell me right here I'm in a range of market from 2 o'clock to 7 o'clock. Range of market. I use the 5-9 box to confirm it, right? The 5-9 box showing no structure whatsoever. The down, up, down, up, down, up, right? I can see when in range of market. So the thanks, brother. So what's that telling me? That's telling me that if I am to place a trade, I need to place a trade in a range of market. ICT people call it a consolidated market. Auction theory people call it a value area, like whatever, or range, whatever you want to call it. But I know that my risk profile, if I had it display 10 micros right here in a direction, then I need to do it towards the range. Right now, the range, we're in a range, but we're shifting down. So I should be selling the high part of that range, right? And targeting low-hanging fruit, previous hour midpoint or previous hour low, right? When we break out away from that, we get the reversal, right? Which this isn't a clear defined reversal. It was at 8:30, right? When the news came out, it's clear as day a reversal, right? But let's say it's 8:30, and now we're trying to align ourselves with what the market's doing, right? Look at this. Could we make it back to previous H1 midpoint or the previous hour midpoint? Not even close. What did the 5-9 box tell us? Right? That the MAE, because remember every candlestick, no matter the time fractal, the hour has an open, high, low, close, a wick on both sides most of the time, and one of those are false. So our job is to identify which one's the false one. The 5-9 box is a fixed constant, right? It shows me we went below it, we stepped above it, we found support on it, and we went. So we can, at this area, expect to close this hour higher. This hour opens up, we go below, we can't even come close to the previous hour midpoint. We step above the 5-9 box, we find support on it. We can expect to go higher. Same, 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 and whatever. We went back to a range of market, right? And then if you're a DOM trader, if you actually see true order flow, like I get to because of my job, right, you realize that they put a big ass bid, 20 handles from this previous H1, each freaking around 20 handles, 10 to 20 handles above the previous hour's midpoint, right, holding it up, which was crazy. But guys, I do have to jump. Hopefully that answered your question. Let's oh, Sapphire Trader's in the chat. Dude, that dude's a goat. I am still in the trying to comprehend everything. Bob, listen, been doing this for the same process for 9 months, right? I promise I'm not going to change it. You're never going to miss out. Take notes today, rewatch the videos. Actually, how do we learn things? We use all of our senses, right? Chew gum, write out what I say, you know, listen to my voice, play music in the background, light a candle, drink something, chew gum, taste. Use all your senses while you're trying to learn a process. But the most important part is that you teach yourself and you don't watch this like a Netflix series. Because if you watch it like a Netflix series, I'll see you on episode 345 and you still won't get anything out of it. All right, have a great weekend, guys. If an idea comes on a new teaching point, set it up for a future day. Maybe even a specific day like Fridays or new setup days. That's big. I don't really change much, but I will teach some different strategies. But yeah, that's a good idea, Jerry. Alright, workflow. It looks like I get caught up. Sci-fi trader, thanks. I'll check that out. Sorry I didn't get it the first time. Hopefully, Costa I. Are you guys related? Like, I see a Costa L or I, and then Costa Money.